welcome to Keeping Up with Trends. This is Federated Zach, senior trading strategist here at CMTrading, and we're joined with your host, Sergio Davids.
So, we're on part 5 of our ongoing educational series with all things stock market related. So, previously we've spoken about Forex, we've done stocks, we've done indices, and last time we spoke about commodities. So, today I thought we'd unpack a specific commodity, and that is gold. We were talking about it so much last time, I thought it deserves to be unpacked. So, I guess basic question is, why trade gold?
Well, I'll answer a question with a question. Why not?
Yeah,
Listen, you don't want to trade anything if it's not trading. So, why trade gold is because it's trading right now. Does that mean that gold is always tradable? No. It means that it's trading right now. Now, it has a certain characteristic. Gold has a certain characteristic that is different than oil, that is different than, let's say, soybeans or coffee. It's not a consumption kind of item necessarily. Yes, during Valentine's Day, there's a spike in the price of gold because, people are buying their significant others more jewelry during that time of the year. But it's not necessarily something that it's not the value of gold today is not its consumption. It's really what it represents. And gold is basically a standard for a country's credit worthiness. Okay, at
right.
any given time, vis-a-vis what assets they have that they're borrowing or that they're buying against vis-a-vis other countries. So there is a lot of trade relations that we have that we don't see, like on a consumer level. We don't really appreciate it because it doesn't affect us on a daily basis. But each country has a X amount of collateral gold for its credit worthiness, if you call it that.
Right. Gold is a fascinating market for me. I mean, not too long ago, back what, 2020, right? Gold was sub what, 1,700, dollars, right? And COVID was obviously an outlier and still is, and we saw it spike to beyond, $2,000. Then it crashed and crashed and was steady throughout 2022, 2023. Now in 2024, we're seeing it at record highs. So, I've asked you this before, and I always thought that, if the gold price is going up, that's great, but not so much for, the economy, because that means the US dollar is going down. Is that still the case?
Well, gold is historically speaking um, is a haven asset for when
Right.
there's inflationary environments. So nevertheless, that inflation has been a little bit out of whack over the past, I would say,
Yeah.
year and a half, let's
Yeah.
say almost.
Yeah, a year and a
Um,
half, yeah.
but it's coming together now, and it's maybe it's settling right now as we're seeing things kind of tapering off. But gold is it's a haven for inflation. It's there to staff off inflation. Inflation goes up, the value of the dollar goes down, gold
Right.
goes up, because it's a tangible
Yeah.
asset.
Asset, yeah. But what's
Um,
what's surprising is, right, inflation was at its highest, what, last year, well, 2023 June, it was up, what, 9% in the States, and they've done quite a bit to reduce it. I think it's now down to what, 3%?
yeah.
4%. So doesn't that trajectory mean, obviously it shows that inflation is down and slowing, and yet gold still remains high? I mean, it wasn't that long ago it hit, its highest level ever. I think it was a month ago, back in February.
So that's why I've been a little bit less involved in gold over the past few years. I just feel like it hasn't really it hasn't traded what it traditionally was supposed to trade. Let's just
Yeah,
say I believe gold should have been at maybe 2,500, maybe even 3,000 at a certain point, but it didn't
jeez.
hit it, and
Yeah,
it's it remains a question what the true nature is. So at one point, I argued that maybe Bitcoin took some of its luster away because Bitcoin
Yeah.
became that haven asset that nobody, that wasn't tied into anything. Um, and it looked like that the cryptocurrencies were taking some of its luster away. And you
Right.
could argue that, and I believe you could still argue that. Each country still has their um, country's creditworthiness or a portion of their GDP that they need to have in reserve um, to offset some of those assets that they're spending. But the question is, moving forward, is that going to continue? Because it's just as arbitrary as Bitcoin.
Well, yeah. I mean, yes, you're right that it is a tangible asset, but gold stocks are depleting. Uh, I feel like it's not just a commodity. I feel like it's a material that's always going to be in demand. At our basic, there's jewelry, then there's semiconductors, there's building materials. It's always going to be in demand, whereas, I don't think crypto will ever go away, but we've seen Bitcoin go from ridiculous highs like it was, about a week ago where it was above $70,000 to sub 15,000. So, yeah,
As I'm
whereas,
saying,
you know,
the cryptocurrencies still haven't really proven some sort of um, what should I say, some stability like
yeah,
gold has. And I think that that's why gold is what it is still today. The real shot to gold was when Nixon took them off the standard of the US dollar being pegged to the price of gold
yeah,
and kind of like set it aside as an asset that is a standalone asset in terms of, vis-a-vis the currencies. But um, it's still a reserve currency. It's still a reserve
yeah.
asset that countries
I
need to
mean,
have in
I mean,
balance
just
with their
on that,
GDP.
like you said, there was such a thing as gold standard, and in our previous talk we mentioned it, but there's many countries that are literally built on gold. I mean, South Africa for one. You know, we had one of the most valuable currencies in the world because of the deposits found in Johannesburg and Kimberley. And there are still countries to this day which rely heavily on their mining industry. I mean, Australia for one, apparently seeing a boom with new gold deposits found, and I think Uganda as well. So it's interesting we're having this late stage gold rush, but I think it's always going to be the case. So, just on that note, what advice do you have for traders out there, wanting to diversify their portfolio and buy a little gold?
Well, gold, like you said, is going to always be there, and it's going to be always a standard that you could reflect to. And as long as it's trading, then you can trade it. But if it's kind of not trading, not kind of, but if it's not trading, then there are other assets to really look at. And there have been you know uh, different segments of when gold was trading, let's say, in a range for a long period of time. So you have to just appreciate the type of asset that it is, that there will be intervals where it'll be range bound trading and trend trading. Okay. And just to appreciate the different nuances of the when that happens, so that you can actually take advantage of the markets at those type of intervals.
Quite fascinating. And on that note, I think we'll end things there. Thank you so much, Fred, for your awesome advice and insights, and I will see you on the next one.